All right. Hello, everyone. Hope everyone is doing well and safe. Really do appreciate you taking time out to come and join us today for, I think what is now our fourth or fifth in the Corsair chat. I guess you'd say medium, as we have more and more experts willing to share their knowledge and expertise, and we're really excited. We have a great panel here for you today. One of our panelists is attempting to get on, so if my man Roger jumps on in the middle, he has a great expertise on that. We'll get him started. So please forgive us for that. A little technical difficulties. But it is essentially my pleasure to welcome you all. Just a quick little tech piece. For those who have any questions, you can see your Q&A function on your screen. You don't have to wait till the end. Any questions that you have, you can just start popping them in there, and we will get to them, get to as many as we can. We're hoping to have this for about 30 minutes or so, maybe a little bit longer, just so you guys can come and get some great information that's hopefully very useful and things that I definitely went through in my life when I was your age and things that I wish I had access to when I was your age. So please pop those questions in the Q&A, and thanks again for joining. I'm going to briefly introduce our moderator of the event and really pass it off to him. His name is Greg McCarthy. Greg is currently, I guess, in your last term or in the process of filtering off the alumni board as president that he has been involved in for the last 2 years. He's been on the board before that as well, and has done a lot of great things for us. And when I told Greg about this Corsair chat program that we were launching, he jumped at the bit to be like, hey, let's go help that class of 2020 and make sure that we're doing what we can. He cares about students first. He cares about UMass Dartmouth. We had a board meeting last week where we had a bunch of wind slides, and if I put that on here, that would take 25 minutes to go over. So just know that he does a lot of work for this university, and it's my pleasure to pass it over to the moderator, Greg McCarthy.
Awesome. Thank you, Josh. It's great to be here. And again, I think we'll probably, I am the millennial of the group, as probably most of you guys are here. But Roger is probably the opposite of millennials. So we will probably have him join about halfway through. But really excited to get in front of you guys today with some really good tips and tricks. And I've actually gone through this panel, I think, 2 times now with Roger and Nelson. And I tell you right now, you're
Did we just lose Greg? You still there, Greg? Nelson, as soon as he's about to introduce you and say how awesome you are, he got booted. So maybe he lost his internet. I just want to check him to make sure. The great time of the virtual world. I don't see him on here for the attendees, but he's still on here. I'm going to ask him to unmute real quick. Sorry about that, everyone. We'll get Greg back. And if not, I can definitely step in, and Nelson will just kind of get started so everyone's not kind of waiting. All right, well, while we're waiting, Nelson, do you want to introduce yourself? I know you have also done this in the past before for some of our alums. Nelson is really our resident expert on anything financial, and I'm sure a lot more than that. And he has a lot of great slides he can share for Q&A, and is really going to handle a lot of issues like retirement and things of that. So I'll pass it over to Nelson.
Hey, how's everyone doing? Thanks for having me, Josh. Greg, hopefully we'll get Greg back on. But I believe this is our I want to say either our 3rd or 4th financial panel, our first one that we're doing virtually. And I look forward to these just as much as anyone who might be plugging in. I feel like, we've had some great people serving on the panel like myself. And I look forward to it just for the fact that I feel like every time we have one of these, I learn something from the people who hop on too. So let's see, it looks like Greg is back on. I don't know if we can hear him. I don't know if there was anything else that he wanted to add. But.
I am back and in the flesh. Sorry about that. I don't know what happened. I just got connected, but looks like we already got to the intros, which will be good. So, if it's cool with you, Nelson, we could probably just dive in here. I have a good list of sort of kickoff questions. I think probably a good starting point would be the financial side of things, and I think probably like maybe even the state of the state. So, I guess my first question that I wanted to ask you was really just specific to the industry right now. You know, in the pandemic, how are things sort of going? What are the things that you're seeing sort of over the last 90 days, and what concerns should people, especially the students here, start to be like, you know, educating themselves on and really looking at?
Sure, absolutely. And so that's a great question. And I think one of the things that I've certainly seen over the last few months is it almost doesn't matter what demographic someone falls in. I feel like finances are or at least should be on the forefront of everyone's mind. If I come across someone in their 60s and 70s, they're concerned about their retirement and their assets lasting for the rest of their lifetime. If I'm coming across people that are in their 50s, they're concerned about the stability of their career, or they're concerned about when they're going to retire, if they're still on track for retirement. If I'm coming across people that are in their 30s and 40s, they've shown some concern over the instability of their income or their career, or what's happening with their 401k, or if they have the right insurances. If I'm coming across people in their 20s, they're concerned about finding a stable career, or getting started with their personal finances. So I think there's quite a few things that you can do to educate yourself when it comes to personal finance. First and foremost, I think having a financial coach or having a financial professional that you can lean on. You know, hopefully you have maybe you have a close friend or a close family member that can guide you in those areas. But if not, there's plenty of places that you can go to educate yourself. But I think just learning more about anything as far as, you know, it could be just something basic as your 401k, and I'll go into some specific examples that will really kind of shed some light on, you know, because it's easy to say, you know, in my experience, it's easy to say, oh yeah, well, I'm knowledgeable when it comes to that stuff, but it's just, in my experience, you don't know what you don't know. And that can, what you don't know when it comes to personal finance can literally cost you hundreds of thousands of dollars over the course of your lifetime. So in the state that we're in right now, especially with, you know, with everything that's going on, I think is just a perfect time to just do a checkup on everything that you're doing financially. It couldn't be a better time to do that. And I think the people that are doing that are setting themselves up properly moving forward.
Yeah, you definitely nailed it. And I think too, so you mentioned 401ks. We just got a question actually in the chat window about 401ks. And before I got cut off, especially for you guys who are joining this call, I joined, I think you said too, Nelson, we've done this like 3 or 4 times now. And Nelson talked about 401ks one time, and I was probably 2 or 3 years into my career, so I was still in my 20s. And I remember you specifically talking about like percentages and sort of how you should approach your 401k. And that shifted my strategy around how I actually think about saving when I am putting from my paycheck, like the percentages that I put in. Can you talk a little bit about that, Nelson, and just sort of like basic 401k saving strategies, especially for people who are sort of starting out and might not even, don't feel bad if you don't know what a 401k is, because it took me a little while, I would say, after I graduated from UMass Dartmouth to really understand, you know, how big of a role it will play, not just in the short term and sort of the growth in the short term, but also in the long term. So I think probably next good question here would just be around that. Can you talk maybe some strategy around what 401ks are and, you know, the way people should maybe approach saving?
Sure, absolutely. Well, I think just you know, I've been working in finances now for quite a long time, and one of the things that I find is that a lot of times, when I say a lot of the time, I would say a solid 80 to 90% of the time when I meet someone and they say something like, well, I have a 401k, I'm all set. That can be a critical mistake in their 401k. And I'm gonna share my screen because numbers talk loud, right? So I'm gonna and let me know if you have this here. Can you see this?
I can see it.
Okay, so it's a time value of money calculator. And for anyone who says, well, I have a 401k, I'm all set. This one simple question that I ask people helps them realize that they're not all set. How is your 401k actually invested, right? So let's use these numbers right here. Present value, let's say I just got a job and I'm starting in my 401k right now, and I'm gonna put in $250 a month. Payments would be how much I'm contributing to it per month, right? So let's say $250 a month, and I'm gonna put in here. Now, if we don't know how it's invested, we don't know how it's performing, right? So that's where I'm getting at there. So let's put an annual rate, an average of even 8%, okay? And let's use 420 months, which would be 35 years, right? Let's say I start working when I'm 25, and 35 years brings us to 60, or we start at 30 and we want to retire when we're 65. So we start with nothing, $250 a month, 8%, 35 years. That would give me about $573,000 at the end of 35 years. Well, I have a 401k, I'm all set. Well, just in my experience, the majority of people the majority of plans that are out there have options in those plans, long-term options in those plans that can average 10 and 12% over a 30-year period. That's average. You know, some people on this call might be thinking, well, 10 or 12%, you know, that's unheard of. No, it's not. There's mutual funds that have been around for 60 and 70 and 80 years, averaging 10 to 12%. So over a 35-year time frame, that's very reasonable. So now let's change that 8 and let's change that even to 10%. So instead of 573, I would have 949. So just by maybe getting a little bit of well, I have a 401k, I'm all set. No, you're not. I've met people that have 401ks that are in what's called the money market portions of their 401ks and have been for 20 and 25 years. And their 401k has been averaging 1% for 25, 26, 28 years. Meanwhile, had they taken advantage of the growth parts, the growth-oriented portions of their 401k, they could have been averaging 10 and 12% over that same time frame. And some of those people that I've met that have 100 or 200,000, they could have easily had 1.1, 1.4, 1.6 million, and not for knowing or not being aware or never becoming educated. Because let's face it, you know, the majority of these companies that offer 401k plans, their representatives, their administrators, they come in, they set up the plan, and you never see the guy again, or they're not interested in meeting with you one-on-one, or they're very difficult to get a hold of. So then 1 year turns into 12 years, turns into 22 years, and it's just very easy to fall into, well, I have a 401k, I'm all set. So, and that little thinking right there can really cost you your entire retirement. You know, it's not a small decision there. So I know it was a kind of a long answer to your question, but I would say get your hands on one of these time value money calculators. If you see on my screen this little blue thing here, that's a EZ calculator. You could get it right on your phone. It's a free app, EZ calculator, the letters E, the letter Z calculator. And it's got anything in there from a home mortgage calculator to a 401k calculator, time value of money, leasing a vehicle, buying a vehicle. It's got all kinds of different calculators in there, as you can see on the left-hand side. So
That's awesome. And I will say, Nelson, I remember the very first time you gave this presentation, I personally was a victim of this. I mean, I remember right after the presentation, I went and switched because I was only doing, I think it was 6%. And I remember you showing those statistics. I then went and changed it right to 12. And now I've been doing 12 for the past couple of years now because it makes a huge difference. And I will also say that I have downloaded the app and I used it specifically when I was also buying a car. And I'll tell you, the car salesman will hate you when you pull the apps out in those conversations because you actually can sort of stay a step ahead of them. And it has helped sort of forecast things of those nature. So that is, can't speak enough good things about the app and also, you know, pushing up your percentages as you do think about 401ks. That was a great answer. Awesome. So we have another one here in the chat window, actually, from Michelle. She has a question. What is the difference between a money market 401k and a growth one? And do you have the ability to choose which one you want?
So sure, very, very quick answer. So a money market almost behaves like a savings account at the bank. So it's not an investment. You earn just a minimal rate of return, interest on those accounts. A growth-oriented investment invests what I like to say in America's top companies, right? So I think if you looked at people's investing thoughts, let's say over the last 60 to 90 days, especially about 60 days ago at the end of February, middle of March, the stock market went down considerably, right? But if we're investing in America's top companies, those companies are still going to provide products and services that we use on a daily basis, right? I mean, Apple and Amazon went down considerably as stock prices in the beginning and the middle of March too. But if you're invested in a mutual fund is just a collection of companies. Well, if I'm invested in 500 of the largest companies in the United States, it doesn't really matter how bad the economy gets. Amazon is still going to deliver packages. CVS and Walgreens are still going to distribute medicine. Walmart is still going to sell everything. Comcast and Broadcom, and they're still going to deliver their communications, and everyone's still going to be Facebooking and Twittering and everything else. And we still need food, and Procter & Gamble is still going to sell their toilet paper, God knows, right? And so it doesn't, you know, that's an important thing to keep in mind, right? So it doesn't matter how bad the economy gets. Yeah, can you get fluctuations in the stock market? Absolutely. But if you're familiar with what you're invested in, and you're invested in the companies that provide products and goods and services that we use on a daily basis, it's very easy to kind of get caught up in the trends of the market. But if you know what you're invested in, it doesn't matter. You know, if it's a long-term investment, it doesn't matter. You know, that's the biggest difference. So.
And that brings up another good point too. So when we were chatting the other day, we were talking a little bit about, you know, side hustles and, you know, the need almost for, especially with everything happening with the pandemic, like additional streams of revenue. And I guess one of the other questions I want to ask, especially for these guys who are in their 20s, you know, how should they be thinking about, you know, their income? Should it be a one stream deal with whatever your job is really what you're sort of focusing on? Or should they also sort of be thinking strategically about, you know, are there other sources of revenue that, you know, I should be considering for my portfolio?
Yes, absolutely. I think, especially over the last 2 to 3 months, I think the people that have additional streams of income, they're not just relying maybe just on their full-time job. You know, I got a quick little story about that. I met a gentleman just the other day who lives in Georgia, actually, his position was he does marketing for BMW and Mercedes-Benz, and very successful. So now he's a marketing consultant. He doesn't work for BMW or Mercedes-Benz, but what those big dealerships do is they pay him to do the marketing for their automobiles. Well, one of the things he was sharing with me is he hasn't had any work. And the reason for that is because a lot of these dealerships are hoarding their money because they're just not going to put money into marketing right now because cars just aren't selling. So because cars aren't selling, somebody like him, his income was cut considerably, and that was the only source of income that he had. So I think having a side hustle, maybe it's whatever it is, it doesn't really matter what it is. I think if you can have something where you have an additional stream of income, I think right now is proving that, that you look at some of these companies, some of these big, some of these larger companies that are folding, whether they just didn't have a good emergency fund, or somebody solid handling their finances, or maybe they're kind of in a niche market where they only have one specific stream of income, right? It's like if I'm a real estate agent and houses are not selling and that's my only source of income, I'm really dependent on what the economy is doing. So I think that's another great question. It's a great perspective. The last 90 days have really shifted how I think should have shifted how people just view everything regarding their finances and regarding their income.
It's changed so much. It really has. And It's crazy to think about. I want to switch over to the homeowner side of things. And I think we have Roger here. Roger, are you out there? I think I see you on the panelist line. You might need to, let me see if I can unmute you. Can you hear us, Roger?
I can hear you. Can you hear me?
There he is. We can hear you. So we're glad that you could join us. Before I jump into the question, though, would love to give you a chance to introduce yourself. Roger is sort of our legal expert here for today's panel, and we'll be talking a little bit about the legal side. And we got some good questions that we want to frame up to him, really specific to, buying or leasing or, purchasing property. So, Roger, would love if you could do a quick intro for yourself, and then we can frame up a couple of house-specific questions.
Okay. Well, there's a number of things we could talk about, and some we go right in with finances as well. But, I've been doing this for quite a few years, and being an educator and being a lawyer, I came into a lot of situations. Right now, I'm quite busy with educational issues. A lot of lawyers have been forwarding work to me because they have clients whose kids are in special needs and going through a lot of situations right now educationally, and as well, also some of these people are paying some big dollars, so it comes into finances. So Nelson hit some good points saying you should make sure you always have an extra source of income. That is very, very important. There's a couple of things though you should take care in as far as housing goes, is you make sure if you're renting, whether it's an apartment or you're renting leasing a condo, there are many things you should be taking into consideration. One, look the property over, find out what you can about the property, the neighborhood. If you find the place you like, before you sign a lease, you should actually take it home, review it, take your time, make sure you understand all your rights, what your obligations are, what the obligations are of the owner of the building. Oftentimes, what you're having today, years ago, usually if you went into an apartment house, and even if it was an apartment building like what we conveniently call today a condo, the owner was present. You dealt with the owner. Unfortunately, today, it's a big business, and people have companies and agents, and the agents don't care for you. They're not looking out for your benefit. Make sure you understand that contract. Don't sign it until you do. Also, if you decide on a place, when you do the run through, bring someone with you, take photos, date it, have the person you're with sign it. And when you complete the lease and it's over and you're moving out, take after pictures. Take those photos again, try to get the same person sign off on it, because you do the security deposit, which is generally 1 month in advance and 1 month after. It generally takes care of 2 months. That's the general rule. And because oftentimes I've represented people where they've gone in and the landlord has actually caused problems. I had a landlord fined because they actually caused problems because they wanted the tenant to pay for it. So you got to be very, very careful on here. Remember, a lease is an agreement. It's a contract between you and the owner of the tenancy for a specified length of time. All right, and you're going to be paying a certain rate during that time. Now, be careful of that's a periodic tenancy. Generally, you pay month to month, or some people, if they have places down in Florida, they'll pay for a year in advance. All right, those are periodic tenancies. But you got to be very careful of a tenancy at will, because sure, you can walk out at any time with 30 days notice, but you also can get thrown out at any time. Right? Stay away from those. All right. And if you have a mortgage, all right, do your shopping. And Nelson could speak well on this as well. You got banks, you got lending institutions. Check all of them out. Some have better rates than not. Be wary. My very first mortgage that my wife and I had, the mortgage rate, this was the best rate around, and I was paying 14%. All right, it was a 3-year variable. I was able to, after 3 years, to bring it down to 10.5. Then I got fixed and it went down to 7. And my last mortgage I had was down to like 3.25%. It was just all through refinancing. But you gotta do your homework, go through it, check out, again, know what your obligations are, right? That I can't stress that enough. I mean, I've represented people. Well, I didn't know I couldn't have a dog. Someone else told me, well, maybe that person got a person in the same building, got permission from the landlord to have it because of whatever reason, you know. But do your homework, because it's crazy, like the situations I run into where people do stupid things. Right? Any questions there, Greg?
I do. I actually got one. So you kind of started going down the lines of, looking at the details, and I think contracts, especially when you have to sign on the dotted line. I think that's another, critical part. And can you talk a little bit about the importance and the role of the contracts that you do have to sign when you do purchase property, and what should people be looking for in the fine print?
Really, the fine print, first of all, there's a couple of things like with the contract, and this goes as well with an employment contract as well. It's, you read it through, and a lot of times there's a lot of legalese that people just don't understand. And unfortunately, a lot of times people that explain it to you don't understand it as well. They're just there passing the papers, all right? So it's do your due diligence. Either call a friend that's a lawyer or someone you know, or someone that has a little background, legal background, that can explain the terms to you. And now with online, you can do a lot of that online. But the biggest thing is to know what your obligations are. That is the most important thing. Know what your obligations are. There's what they call the rights and duties and obligations. Well, if you're on a mortgage, we'll say, you have to pay X amount of dollars for every month for a certain amount of years, right? Well, that is due. If you miss a payment, you're getting yourself in problems. Remember that the bank has right, or that lending institution has right to that property until that last dollar is paid. So you have them, if for some reason you cannot make a payment for a month or two because you came in through some hardship, whether you lost your job, you came down with some medical illness, speak with the lending institution. This is one of the reasons why I like to go, if possible, to a local bank. There are still some banks and there are still some credit unions that handle their own mortgages. And if you can do that, sometimes it's worth paying an extra percent to have that. It's like a family-oriented situation. They will work with you. These are the things you should really check out. And don't be afraid if you can get a better rate to change your mortgage. And oftentimes, to get you, they won't be charging you for anything to do another check on the property status. You know, these are things you should really be looking out for.
That's a good one. Got another good question here, Roger. I think this one will be good for you. Have you seen any examples or share some examples from a lease agreement that can throw tenants off, or things that people should look for?
Well, oftentimes what happens, people will, okay, they'll put some things on the wall, they'll put some fixtures, or they'll put a fan on the ceiling. Remember, if you put anything that's attached, you attach something to a wall, or you put a ceiling fan, or like years ago, you used to have ceiling lights. You put those up, that becomes the property owner becomes the owner of that property. Unless you can work out an agreement and say, is it permissible for me to put it up? I'd like to take it back when I leave, but then you would probably have to put something up in its place. That's something you'd have to work out. But oftentimes people get into trouble because I'll use a ceiling fan because it's hot right now. And they'll put it up, then they pull it down. Well, sorry, pal, it's up there. I had a situation a few years ago where a friend of mine that was a mechanic, his son was a mechanic, went into, rented out, leased out at a tire place, some front end alignment and did some other mechanic work. Well, they had some words and they parted their ways. Well, the owner of the tire shop wound up with some of his equipment because it was attached, and this friend of mine didn't ask him permission to do it. So these are things you got to watch out for. Whenever you're not sure of doing something, don't assume that you can do something. Just run it by the landlord, right? And if it's something that's expensive, something that's big, get it in writing. It's very hard to prove a verbal agreement, right? Get it in writing, right? And if a landlord doesn't want to put things in writing, I would start looking for another place, because that means it's not a person you want to deal with in the future.
That's right. That's right. I want to shift back a little bit to the 401k side of things and putting else back in. Let's talk a little bit just about the financial industry in general right now. Are you guys, obviously with the pandemic, a lot of things to navigate? What are you seeing? What is sort of the state of the industry right now? Are more people sort of really trying to prioritize this now more than ever? And what are you sort of seeing in your world?
You broke up there. So if I understood your question, it was something along the lines of a 401k and what am I seeing in my world, but I couldn't really make out what you were asking.
That was correct. Yeah, can you hear me now? Sorry, I don't know if
I can hear you perfectly now. Can you repeat that question for me?
Yeah, so the question was, can you talk a little bit about the financial industry just in general right now? I mean, what are you seeing from some of your clients? Are you seeing like demand going up as people are trying to navigate throughout the pandemic? What is sort of the state of the state with the financial industry right now?
Yeah, I would say demand is through the roof. It goes back to one of the original things that I said. I think finances are just on the forefront of everyone's mind. Yeah, so again, it doesn't matter. It doesn't matter their age or where they're at. I think, if they have a family, they're concerned if they have the proper amount of life insurance, or if it's going to pay if they get the virus, or if they're in their 50s, they're concerned about their retirement. People are worried about their 401ks. I think it's just all over the place. So, I mean, from what I do for a living, it's a good thing, and I think just the Zoom technology type of thing has allowed us to meet with people faster. I've been telling people that are close to me, my family, I feel like I'm meeting twice the amount of clients in half of the amount of time because we're not commuting anywhere. But I would say demand is through the roof. I said it earlier. I think right now is just a perfect time to if you haven't already, just go through all of your finances with just really detailed, go through the whole thing. Hopefully you have someone that can do that for you. But I think right now you should be taking a look at all of your finances right now. Absolutely.
It's a great point. It's a great point. All right. We have another question here in the chat window. Manisha, you've asked some great questions today, so I think you're definitely benefiting from this little forum. But does one have to be a member of a credit union to take out a mortgage from a credit union?
No.
General, I would say no, right, Nelson?
Yeah, no, you don't have to be.
Some of them, like the Fall River Municipal Credit Union and St. Anne's Credit Unions, I know that's local. As soon as you open up an account, you're a member.
Yeah.
So it's I would say generally not, no. I think, Nelson, would you agree with that?
Yeah, I would agree with that.
Greg, it's Josh. Hey, we had an email question too, if you don't mind me jumping in. Sorry.
Sure, I like it.
One of the questions that came to us was essentially students have just graduated. They're obviously looking student loans in the face. When you're trying to put together financial strategies for saving for retirement, saving for contingency, paying off student loans, maybe getting a new car, is there any advice that you have in regards to kind of prioritizing how to be able to do that? And the question was really about, should I be saving for retirement even though I have outstanding student loans?
And so I have a really simple slide I'm going to share with you guys right here. Let's see. Right here. Can you guys see this here?
I can see it. Yep.
So I've been telling clients this for a long time, and it's impossible to go wrong if you follow this. So the first part of your finances should include an emergency fund, to where you have 3 to 6 months of your living expenses set aside. And I think anyone who did not have that over the last 90 days, you see larger companies that didn't have that in reserve. And you see larger companies going under because they didn't have 3 to 6 months of their expenses set aside, right? So if your budget is $3,000 a month, well, then you should have 9 to 18,000 tucked away, and that's what you want to leave at the bank. Leave that in the bank. That's not where you save up for a vacation. That's not where you buy a new car. That's not what you use as a down payment on a home. That's just 3 to 6 months of your living expenses tucked away, so that if there's an emergency, you have your bills are paid for, right? For at least a few months. And then the next part of your savings would be specific towards whatever goals you have over the next 1 to 10 years. And that's where you can invest in very, very conservative investments, right? That maybe pay a 3, 4, 5% type of thing. And then the last part of your savings would be for your retirement. And to answer that lady's question, should you start saving for your retirement right now? Yes, absolutely. Because the most powerful thing when it comes to investing is time. Not how much you invest, but how long you invest for. And that can make a massive difference down the road. So you can always squeeze out an extra $50 or $100 a month. And if you're paying off your student loans or you're trying to buy a house, an extra $50 or $100 a month is not going to make a big difference. It's not going to get you out of your student loan debt that much faster. It's not going to make it that much of a difference buying a home, but it will make a much larger difference in your retirement over the course of 30, 35 years. You'll be happy that you started sooner. I haven't met one person in my career that said, I wish I would have started my retirement planning later. Put it that way.
I'm so jealous of all the students on this call.
I hear Roger laughing, but because I'm sure he would concur.
Oh yeah, it's but there's going along with that too. It's when someone's going in for a a job and you're offered a job or you're offered a couple of jobs, and I think Nelson will agree with me here, it's the salary always looks nice, but also look at that benefit package. Because, you know, you get an employer that's going to willing to pay a lot of your medical, and it's going to, you know, contribute to your 401k and your retirement plans, you know, maybe well worth taking a lesser salary. You know, it's the benefit package is worth a lot. So people ought to be looking at that. And bringing up what, again, about this goes into finances, it's watch out with credit cards. People have a tendency to put so much on credit cards that they get overwhelmed with their bills that they have to pay every month. About 7 or 8 years ago, a good friend of mine, his son, who's a UMD grad, 4 or 5 years after he was graduated, he wound up filing for bankruptcy. It seemed that while he was in school, he had every credit card that was sent to him. And he'd love to take people out and just charge and charge and charge. Well, it got to the point where he was unable to pay his bills. And he accumulated over $300,000 in credit card debts. Oh. So he's still working out his bankruptcy. And it's not something, it's something you got to watch out for. And it's very easy to take out the card and charge it. And speaking of credit cards, you know, shop around. There's so many cards out there. Check to see what the banking fees are. And if you lose us, you got a card stolen, report it immediately. Billing errors, report it immediately. All right. And if you're denied credit for some reason, request why you are being denied. The Equal Credit Opportunity Act requires that you be told exactly why. These are things you got to really watch out for. And also, whenever it's credit arrangements, you got to watch out for things such as balloon payments. Payments are generally smaller at the beginning, and at the end, you got a real big one. Can you afford that big one at the end? Also, watch for acceleration clauses. Sometimes there are some clauses in some credit arrangements where the lender can actually accelerate your payments, either increase them or want them sooner. Watch out. Also watch out for bill consolidation. Bill consolidation, you mean to combine everything into one pot, but sometimes you're actually paying more because you got a higher rate of interest. So be very careful. And also, as the internet gets more and more used, be careful what you provide on there, because once it's out there for everybody to see. There are a lot of situations, and Greg, you know this from dealing with cybersecurity, if a program can be made, it can be broken. You know, and that was
right.
By an MIT prof who specializes in that. So he says, you know, a lot of things are very safe, but just be wary what you put out. You know, if there's something you don't want it out there, don't put it out. It's that simple. I'll tell you one thing.
That's right. Strategic.
What Nelson's been saying, it's very, very helpful all the time.
All right, we have another question here in the chat window. I have a lot of work experience, and I'd like to get into owning income properties like a duplex. So basically becoming a landlord as a way to supplement my income. Are there any resources or tips you might have for someone jumping into this for the first time? That's a good question.
Well, the first time is do your due diligence. It's not something I really work with, but I have some friends of mine that do that. They've been doing that for about 25, 30 years. They started off really easily. They actually took a course that are available. You'd have to check online to see where they are. They're being offered. You may be able to even take it online. And one person I know, they took a real estate course, and they became more knowledgeable about real estate itself. And that's a good way to go. It's a nice way to generate money. And I know a number of people that do that. but you got to be prepared for the downside. And the downside is that you're going to be responsible for the maintenance of the property. You're going to be you're going to have some very good tenants. You're going to have average tenants, and you're going to have tenants that are going to be not so good. And these can be your problem areas. It's eviction is not as easy as the word eviction says. All right, you got to go through the legal process, and if they can't afford an attorney, that's going to prolong it even longer because you're going to get an attorney that can be provided by the court, or you're going to be dealing with someone that's a clerk of the court that's going to be helping things out. It's going to be a long and drawn out. So it's a nice way to bring some extra income, but be prepared for the downside. The positive side, you can make a lot of money. The downside, it can cost you a lot of money as well. My best advice would be to take really a real estate course. They're relatively inexpensive. It could also make a sideline of, it could also be selling property at the same time. You know, that would be my advice.
That was a good question. Good question. Something I've been thinking about myself too. So, but it's funny, you know, you look into the pros and cons, you know, there is opportunity to really supplement that income, but then there's also the downside.
Greg, if you really want a good handle, on real estate, contact a former president of the Alumni Association who was very quite involved with the university and has made a ton of money. And I mean, I'm talking millions, is Byron Ford.
Oh, how could we forget?
Graduated with me, 70 he was class president, and he's received numerous awards over the years. Really, he would be the person to really contact if you want to get into anything dealing with real estate. I can get in touch with him if you want for you.
Awesome. I like it. And I think everyone will soon start to realize, especially you guys who are students, the power of the alumni network. You know, you'd be amazed how people would be willing to take meetings and chat with you. So I think we should definitely take you up on that one, Roger.
You know, and Greg, if we want to do something just on real estate and stuff like that, I could speak to Byron, and I'm almost positive he'd be more than happy to do it.
Awesome. Well, I think what do we got left, Josh? 10 minutes? Should we do some closing statements? If anyone else has any other questions, this would be a perfect time to throw them in the chat window. But any closing remarks? Nelson, I'll start with you, or closing pieces of advice for our future generation here.
My only advice would be to work hard on especially if you're, one of the things I wish I would have done more I'm going to be 45 in September, although I don't feel it. I feel younger, I feel pretty good. But one of the things I wish I would have done more of in my 20s is reading and becoming more educated on growing my mind and working on like self-improvement books. You know, it's nice to be smart, book smart, and know everything, and you can be financially savvy, and you can have a great career, and you can have all these things. But my best, for me personally, I wish I would have worked harder on myself in my 20s and gotten better at the stuff that they don't necessarily teach us in schools: positive mindset, great attitude, time management, those sorts of things. So that's work just as hard on that as everything else, you know.
Great response. How about you, Roger? Any final closing piece of advice for everyone here today?
Yeah, I'll have just a word of advice in a minute, but I want to say I wish I would have had Nelson around in 1970 when I graduated. And I really mean that, Nelson.
Oh, thank you.
Really doing these panels with you. A couple of things I just would like to tell, especially recent graduates and people that are about willing to, well, not only graduates, anybody that's listening out there, is the importance of having a will and a healthcare proxy. especially a healthcare proxy, because a healthcare proxy is a document that lets someone make a decision for you, a medical decision, if you are unable to do so. And I'd like to use the example of a good friend of mine whose daughter graduated from University of Connecticut, and her best friend graduated from one of the universities in New York, and they were going out for a job interview, one in California and one in Texas. So they flew out in Texas and were going to drive to California, make a trip out of it. You know, they wanted to really take the summer off after graduation. And my friend's daughter's best friend, they got into a car accident. She went into a coma, and they had to call home and delayed medical treatment by 4 or 5 days. So no matter how young you are, it's always good to have something like that on hand so they can make a phone call and it makes it a lot easier for the medical professionals, because medical professionals out there, they asking a lot of questions. My friend's daughter couldn't answer them, back and forth. First of all, they had a tough time getting in touch with the parents. And so it's very, very good, just good advice for anybody, that these are things that they should have.
Awesome. Well, thank you guys so much. No, this is
Greg, you did another outstanding job running this.
Yeah, we love these. These things are awesome, and I tell you, like, I feel the same way. I even as the moderator, I learn a lot. You know, the simple things of contracts and getting things in writing. And I'll be honest, but the first time we did this, when Nelson went through the 401k part and showed the percentages, the next day at work, I changed my percentage from like 6 to 12, and I've been doing that ever since. So my advice to you guys, if I could give myself in my early 20s any advice, is to that 401k in your retirement absolutely should be starting now. I mean, that was, I remember one of the biggest eye openers for me was like, wow, I need to up. Like, I'm going 12% right now, and look at that difference it's going to make. So big thanks to Nelson and Roger, and Josh, I'll throw it over to you if you have any closing remarks. But thank you guys so much for everyone joining us here. And if we get good feedback, we love to keep things like this going and, you know, do other versions around other topics that might be useful. So I'll throw it back to you, Josh.
Yeah, absolutely. Thank you so much. You guys are 3 pros, and we love everything that you do for the university and appreciative of everything that you give back on a daily basis. Just for everyone listening, we're going to send out a survey. Please do that survey if you have any topics that you'd like to go into. That'd be great for us. It helps us put on some new webinars as we continue to move forward, and hope that you and your families all stay safe. And that kind of concludes our Corsair chat. Thanks so much, Greg, Roger, and Nelson. You guys are the best. Much appreciated.
Thank you,
Take care, guys.
Have a nice
Stay
day.
healthy.